As you know, the stock market rallying, the Dow on track for a 3% gain this week, despite that 400-point drop on Wednesday. Right now, we're up 274 points on the Dow Jones Industrial Average. With the European debt crisis slowly moving off the front page, is the Super Committee the next big overhang for the market? Let's bring in Michael Shinnick, portfolio manager of the Wasatch Long Short Fund, and Mark Lamkin, who's the chief executive officer of Lamkin Wealth Management. Welcome back, guys. Nice to have you here. Let me start with you, Michael, if I can, because the Super Committee, it could go either way, could it not? If we have progress, we see the market continue to extend its rally, but there's a lot of betting that there won't be enough progress to satisfy Wall Street. How much of an overhang will that be?
It's clearly an event. There's uncertainty. I think the thinking is that the moderates will start to pull towards the middle, and that's what compromise is. That's government. It's an election year. The people know that the American public is frustrated, and I think begrudgingly you'll see Republicans give on tax increases and Democrats give on entitlements. The question will be how much we get. If it's just $1 trillion or $2 trillion, which are huge numbers, that may not be enough. S&P has said unless there are $4 trillion in identified cuts, they're going to be ready for another notch downgrade.
Yeah. Mark, those are huge numbers. At the same time, there are a lot of things the market is focused on right now, specifically Europe. Do you think that the market is really paying close attention to the Super Committee?
You know, I think they will. I think the European risk, definitely market's trading on headlines, but I think the quarantine package is working. So I do think it is on super committees, and I think Michael's right. I think the committee finally realizes that they can't kick the can down the road anymore, or they'll get their can kicked out of office. I mean, and the good news is, from a Democrat perspective, they're coming with $3 trillion plus, and I think the Republicans are going to have to come to there and get north of $3 trillion. Because let's face it, the first downgrade hurt our pride. The second downgrade of our debt is going to hit us right in those pocketbooks. And these men and women on the committee don't want that. So it is about the Super Committee short term right now.
So, Michael, I know that you're cautiously optimistic, but there's still a big note of caution as I read through my notes. Where would you put money to work with the caveat that there may be some bumps along the road and volatility that we have seen for the last couple of months, sometimes in extreme?
Sure. So, in what I do, I run a long-short portfolio, so at any time there are always some companies that we think have tailwinds or positioned to do well, and other companies that are facing headwinds. Those with the tailwinds on the long side would be in particular in technology, energy, and some consumer. Tech is something, the refresh rate, given the pace of change, that companies and individuals and governments simply have to keep buying. We saw a wonderful report this week from Cisco. Companies like Intel, Microsoft, even Akamai, I think are doing very well, have great balance sheets.
So, Mark, how specific?
On the energy,
go ahead.
I was going to say energy is the same thing. I mean, despite all the chatter, and you were talking just a few minutes ago about the price of oil, the pace of demand really has not come off. You know, fully expect that next year the world will consume more oil than it did this year, and it's tougher to find. It's difficult to extract, and they're going to make money.
I don't want to run out of time before we get Mark in there with his picks. Mark, what do you think? How do you play it?
Well, I think right now I want to be focused on companies that don't have a lot of exposure to Europe and won't be hurt in that export market. So I like that small cap. I like that S&P 600, that small cap blend that depends on U.S. consumers that don't have a lot of export business. Historically, the fourth quarter is very good to the markets. I also want to focus on U.S. consumers with like the Dow Jones U.S. consumers goods portfolio. I think heading into Christmas season, disposable income's up. I think we're going to have a nice rally year into that. And lastly, I'll agree with Michael on technology. Anything that helps companies become more efficient, sell more productive in a slow growth economy, I think companies will continue to buy that. So I think those are three picks right now that are going to do very well between now and the end of the year.
Okay. Lots of ideas on the table, gentlemen. Thank you very much. Appreciate it.
Thank you. Appreciate it.